Thank you for coming. Today we have a very, very, very great group that's based out of LA, NKSFB. They focus on business management, taxes, estate planning, royalties, estate planning, and et cetera. So before I go into, I want to do a couple of housekeeping rules. Number one, there's a few people I want to thank. They're here. If you're here, you can raise your hand. Tommy Powell, Dave Maloney over at Falk. I don't know where Rick Burton is, and our dean, interim dean, Alex McKelvey, for actually working with me to put this on. So thank you tremendously. And I have to give a special shout out to Don Williams and the people in the IT department, just because tirelessly they worked hard to get this done. So instead of kind of giving you guys our panel up here, working more or less towards giving their introduction, I'm gonna do something a little different. I'm gonna have them introduce yourself, but I'm gonna lead in with the questions. So the questions that I have for all you guys, and we can start with Mark, Danny, or Craig, is what do you do? Who do you work with? How did you get into the business? And what do you guys do for your clients? So
I'll take it. First of all, thank everybody for being here. My name is Craig Brown. I am a partner at NKSFB. It's a lot of initials, but essentially it's the name of the 5 founders of our firm. We are a business management firm. We've been in existence for a little over 40 years. Business management is really one of those things that's kind of a non-specific term. But in the world of entertainment, business management is a specialty of accounting, much in the same way that an orthopedist would be a specialty of practicing medicine. So we are a CPA firm that specializes in business management. My 2 partners that are here are certified public accountants. They deal with the filing of taxes, but my role is working with individuals on the day-to-day aspects of their financial life. So the easiest way to describe it in kind of general terms would be able to say that we act in the capacity as a CFO for individuals who are in the entertainment space. And I always say entertainment, I use the term and say it's anything where people pay to watch somebody perform. So it's actors and actresses, musicians, professional athletes are our primary focus. And then there's people who are on the periphery of that, ultra high net worth individuals, music executives, things like that. My specialty and focus is in the sports space. By way of background, graduated from Tulane University, played baseball at Tulane, was fortunate enough to get drafted by the Cleveland Indians and played minor league baseball with them. And then when my career was over, I had to figure out what I was going to do with the rest of my life because I was not making millions of dollars. And I started working at Merrill Lynch. Spent the first 8 years of my career at Merrill as a financial advisor, and realized I didn't really enjoy managing people's money in the way that you do it at a financial advisory firm, at a stockbroker firm. I was not really interested in making sure that the market was up or it was down, and not really having any control of whether or not the market was up or down and whether or not those clients made money or lost money during that day. But what I could control was making sure that they stayed on track with their budgets, made sure that their credits was kept in a great place, or if there was bad credit, making sure it was repaired, making sure that when it was time for them to buy a home, that we were looking at where can we get the best rates, making sure that when it was time for them to get automobile insurance, where can we find the best rates, where can we make sure they have all the best coverages. And all those things led me to NKSFB, because in NKSFB, we deal with everything that typically is not the investment. So we don't invest money for clients, but we oversee everything that does go on in their financial life. And so I work in sports. I have about 97 professional athletes across the 3 major sports. As a firm, we've had 5 of the last 9 Heisman Trophy winners as clients. I think we had 8 individuals in the NBA All-Star game last year. Multiple #1 overall picks in baseball, basketball, and football. But there's a very deep commonality between all these individuals, irregardless of whether or not they're an athlete or an entertainer or an actor or an actress. And those things really are a couple of things. Number one, they're all relatively young when they start earning their income. Number two, they all have an uncertainty in what that earnings career is going to be. Are they going to be someone who is the #1 overall pick in the NBA draft a couple of years ago who never gets to a second contract? Or are they somebody who's going to have a very long career? It's never known. So you have to deal with that uncertainty. And then number 3, which will kind of segue into these guys, is they have what's called multi-jurisdictional tax returns, which means everywhere that they earn money, they've got to pay taxes. And so we deal with all of those aspects of these clients' lives.
My name is Mark Silla. I'm a tax partner at the firm. I've been with NKSFB for approximately 22 years. The firm started off as a 3-person firm back in the 80s, and it's grown to be, right now, I think we're almost 700 people. I work primarily, I'm a CPA, I'm also a CFP. I work primarily with clients regarding income tax planning, estate tax planning, generational wealth tax planning. I work with both the athletes, but also ultra high net worth individuals. I work with a significant amount of wealthy family groups, single family offices, where we're involved in, everything from looking at investment deals to see what's the tax effect, to figuring out how we can best, do succession planning on a business or transition wealth to the next generation. So it's a fascinating practice. We get to work with some of the most interesting people in the country, actually, and as Craig said, a great deal of sports clients, music clients. I think we're probably the largest music firm in the country. My managing partner told me the other day, he goes, Mark, out of the last 14 Super Bowls, 12 of the halftime acts are our clients. So it's an interesting statistic. So. I love the firm. I love the people I work with, and again, thanks for having us here. I look forward to the conversation.
Hey, so my name is Danny Moore. Of the 3 of us, I'm the only one who resides in New York, so I got that going for me. I'm a CPA. I'm one of the tax partners in the firm as well. My background is historically, up until 2014, my practice handled high net worth individuals, a lot of Wall Street hedge fund managers, and NKSFB approached me and my partners, said they needed a tax department in New York, and we merged in, and about 2 months in, I met Craig and started working with some of the athlete clients, and over the last 8 years have really transitioned much of my focus to athlete clients. On top of what Craig was saying, aside from just income tax planning and high net worth planning, we look at families as a whole. It's not just the athlete, but sometimes it's mom and dad, and sometimes it's the business ventures that they start. And we have conversations with them that's not just focused towards, hey, you play for XYZ franchise, and we're going to make sure that you pay your taxes and we're done. We look at it as a family structure. What is mom and dad doing? Does the family have outside business ventures? How should we structure it? How can we save everybody as a whole? As Craig said, everybody's got different needs. You have a football player who may have a 2-year lifespan. You may have an NBA player who's got 26 years. And so the conversations we have are not just, hey, send us your W-2 and we'll talk to you later. Our conversations start on January 1st and they end on December 31st. We are constantly in touch with them. When I tell you that Craig will call me up, or some of our other partners will call me up and say, hey, we got a question, we got an endorsement deal, or we have an investment deal. What do you think? We're all intertwined and we have these conversations. It's a very interesting and different practice, and it's something that really challenges not just our work, but it challenges our mind. If you take a look at what we do, it is not just number crunching and spitting out a tax return. It's really challenging how we can preserve income for these individuals, because their their career span is much shorter than what their lifespans are. And we have to make sure that we have conversations so they know, hey, listen, when you're 35 years old, this is what you need for the rest of your life. And so it starts now. I mean, this will kind of dovetail into some of the conversation here. It changes now with the college students. This is something that we have really been focusing on a lot. We've had a lot of conversations with student athletes and family members, parents, teams, schools, with the new NIL situation. It's really, the conversation is starting now, whereas it used to start on draft day, starting freshman year of college.
And in some cases, I'm glad that segue into what overall the discussion is dealing with NIL and how it works from the financial realm, from the social realm, et cetera. So I'll kind of lead into the first question. So please feel free, anyone pick it up. So what experiences would you say that you guys currently have with NIL? And I know you briefly talked about it, Danny, in terms of the importance among the student athletes. What are some of the things would you say from an experience standpoint that you have within this space?
Yeah, so I'll jump in and Mark and Craig can add to it. So we have quite a bit of experience. Obviously, based on what we just told you about our firm, we have quite a number of relationships with financial advisors, agents, attorneys, and we are often asked questions, whether it's about, what constitutes earnings, what is, how is a player paid? We answer the question very simple. Whatever you receive in value, that's income. That's taxable income. Whether it's cash, whether it's a car, whether it's merchandise, whether it's
Equity.
whether it's crypto. To the craziest of question I got was a jeweler's giving my son a $25,000 diamond ring to give to his girlfriend so he can propose. That's income. You pay tax on that. So, questions that we get asked regularly is, what is income?
Another thing.
And by the way, that's a gift from him to his spouse.
Exactly.
Another issue, gift tag.
And the other thing that I often see, most of the time, parents are really concerned about taxes. It's historically been a thing that everyone has thought about, and it's been kind of front of mind. But with NIL, my concern is that the student athletes are not necessarily paying attention to the tax ramifications of this income that they're receiving. Lots of times, everyone hears about the very large, individuals who are receiving, significant amounts of NIL money. And I can tell you, the majority of those people we're actually working with on a day-to-day basis, so I can speak firsthand on that. But it's the average player that's getting $10,000 or it's getting $5,000 or $15,000 of compensation now that really is getting left behind. Those people that are making $1 million, $500,000, $1 million in NIL money, they're going out and seeking the proper advice and guidance on what to do with it and how to plan for it. My fear is that the student athletes that are getting the smaller amounts, the $5,000, the $10,000, or they're getting a courtesy vehicle or a loaner vehicle from a dealership, are not really having an understanding of what the implications are from a tax standpoint. And that's the thing that I think really has to get emphasized more. And the thing that I'm seeing is not being emphasized at all right now in college sports, And the issue that really comes into play is this past April would have been the first year that individuals would have had to file a tax return off of NIL money that they received. More than likely, I think they're saying that the expectation is that 5% of the student athlete population that received NIL filed a tax return. The scary thing is, with COVID and just the lack of speed with the IRS, you're not going to have individuals getting notices saying you didn't pay your taxes, you need to pay your taxes. Okay, not for the next year or two, right? And so what ends up happening is then you start having penalties and interest that start compounding. Every person who's going to get NIL money is not destined to go on and play professional sports and then be in the position to pay back those taxes if they haven't done everything appropriately. So there needs to be more emphasis put on the understanding of, hey, this is the projected tax bracket you're in, which means that every dollar you get, 20 cents needs to be set aside into a separate account because that's really not your money. We call it a tax provision account. But because they're getting this money gross, there's zero taxes. When any player gets money from NIL, they're receiving that money gross. So there's no taxes taken out. It's 100% their responsibility to pay the taxes on all that income. But nobody's advising them on what tax bracket they're in, how much they should be setting aside to be able to pay those taxes in the future. And so my fear is that someone's going to get $10,000, they're going to spend $10,000, and then they're going to owe $2,000 down the line and not have that money to be able to pay it.
And I think you made a good point in that things have changed for the student athlete. I mean, historically, a student athlete's been a student and an athlete, but the way they're being treated by the IRS, which is as an independent contractor, they really are a small business. And so as a small business, you know, they need to have structure to be able to make the proper decisions. You know, and a lot of this happens up front. If what's going to happen is what your fear is correct. What's going to happen is rather than engaging in this planning along the way, where you could reduce taxes and make significant planning decisions, it's going to be after the fact and responding to notices that they may not even have the cash to pay. And again, like you said, the IRS is going to be able to match. What happens is the IRS is sending out when an athlete gets paid NIL money, the business is going to send a 1099 to the athlete, but then they're also going to report it to the IRS. So the IRS is going to know exactly how much they received. They're going to look at returns and see, is there a return? Or if there is a return, did they report all that they should have? And if they haven't, they're going to send out a notice. And right now, we're probably, I mean, look, I have some clients that are dealing with the IRS for 2020. And so the IRS is so behind right now that, I mean, you may not start seeing notices on this for another year and a half. And by that time, pretty much a lot of money is going to be gone, I think, especially for a lot of the smaller NIL deals.
Right.
Yeah.
So to touch upon what you just said, Mark, you said, so the student athlete now should be quote unquote, a small business entity. So what does that mean in terms of what needs to happen?
Well, I think like any other small business, the first thing you want to look at is how are you structured? How are you set up? Are you going to be a sole proprietor? Are you going to have an entity? If you're going to have an entity, what kind of entity? I think now we've spoken about this before. I mean, every athlete at a minimum should be an LLC or a single member LLC, if for no other reason to limit their liability. I like S corporations because S corporations are pass-through entities. There's a lot of planning you can do with it. I also like it, you know, if you're not an S corporation and you're a sole proprietor, what I don't like about that is that you're filing a Schedule C and all of your income and your expenses are on your individual return. Versus if you're an S corporation, you're pulling one number off of a K-1 and reporting on your return. The IRS is historically, my experience has been the IRS is much more prone to audit large Schedule Cs than S corps. S corps are not audited that frequently. So from a practical compliance standpoint, I like S corporations. I also like S corporations because the income that flows through on an S corp is not subject to self-employment tax. And we touched a little bit about the kind of taxes they owe, but these athletes are going to owe both federal income tax, federal self-employment tax, and state income tax. And so you can minimize some of the self-employment tax by having an S corp and doing proper tax planning along the way.
Yeah, I think one thing, just, not to kind of pigeonhole everybody into one situation. Everybody's different.
Mm-hmm.
Every athlete's different. Carmelo Anthony is here now, and a breaststroke.
Hampton.
I was gonna say a breaststroker on the third relay might be here, and so everybody's different,
Mhm.
as Craig pointed out. And I don't want everybody to think, hey, I have to call NKSFB and see what they're doing. What we advise clients is everybody knows a CPA, whether through family, whether through the parents, and they should just have a conversation and say, this is what we anticipate we're going to be paid, and that's where you can start to check and see what makes sense. What sort of entity makes sense? As Mark said, is it a corporation? Is it an LLC? Do you have to make estimated tax payments? Do you need to figure out where you're a resident? For the students here, they live in Syracuse. I mean, right now they're residing in Syracuse in one of the dorms or maybe in an apartment. That doesn't necessarily mean you're a New York State resident. And so that's a question that's pretty vague right now. For anybody who doesn't know, New York State is probably the most aggressive state for residency purposes. for college athletes, there's no clear guidance. And so we've been posed at least 10 times from 10 different states. Where's my child a resident? So when you have somebody from California who's playing for Texas, they say, can we be a Texas resident? Well, they're not technically domiciled there. And so that's a question that really comes up that we have to drill down on.
One thing to that point for Danny, to kind of dovetail off of what he's saying, the importance of that. So the highest federal tax bracket is 37%. Okay, so if you're earning significant amount of money off the field, you're in the highest tax bracket, you pay 37%. Endorsement income is sourced to your state of residency. Okay, so you notice you have a ton of golfers that live in Florida. That's not because of the great weather. It's because there's zero state income tax in Florida. Okay, Texas, there's zero state income tax. California, the highest tax bracket is 13.3%. So you can literally be in the 50.3% tax bracket in California and be in the 37% tax bracket because you live in Florida and earn the same money, right? You can have an endorsement deal from Nike, and because you live in California and a resident of California, you end up paying 50.3% in taxes versus if you lived in Florida, you pay 37% in taxes. So it's a significant point. Residency is a big factor of what we always deal with when working with clients, because it's a place where you can have, if you think about from an investment standpoint, if you went to a financial advisor, an investment advisor, and said, hey, I want you to get me 13% on my money, they have to be very aggressive in order to get 13% return on your money. If you can do that just by choosing the proper place where you're a resident and you can save that 13%, you're in essence doing the same thing without taking on that risk. So residency is a very important thing that comes into play for all athletes. And then this NIL space is really kind of making it difficult because you actually have people residing in a place, but they're not technically a resident there because it's, their college.
Yeah. And just to give you an example of that, because, you hear us talk tax talk and it's like, okay, wow, I'm getting hit left and right. Just to give you a real practical example, I had a father call me up about a month and a half ago. He's from California. His son plays in Louisiana for a school in Louisiana, and he's looking to be drafted in one of the major sports. And one of the teams that's looking at him is in Florida. And they wanted to take a position that they were a Louisiana resident for his NIL income. And one of the conversations we had to say is, you can't keep jumping around. The states don't look at it that way. They don't say you can be a nomad and say, okay, today I'm in California and then I made money, so I want to be in Florida. And you have to really detail it, and you have to make sure you have the documentation. And so with this particular client, what we told them was, because of the income isn't so high, you're better off staying in California for tax purposes for this year. And if you do wind up going to Florida where you think you're going to be picked, well, then you have a clear move to Florida. There's no argument. But if you muddy the waters by saying, we're going to throw Louisiana in there, now all of a sudden, all the states start fighting and you really don't have a leg to stand on. And so these are the conversations that we have. And it's not just with the student athlete or the young player. It's with the family, with the agent, with the management team. And it's real conversations.
And a lot of these are facts and circumstance. I mean, Tiger Woods, before he got in his first major merchandise, this was very early on, was a California resident. He shifted his residency to Florida. The states are very aggressive. California audited him. They found him not to be a resident. It went all the way up to, I believe, California Supreme Court, and then they found it. And Tiger did everything right. He completely moved. He cut ties, but states don't let go very easily. So you really, when somebody is going to change residency, you want it to be planned properly and you want it to be documented.
Yeah. And the other thing too, everything is a negotiation.
Mm-hmm.
And so if you're an individual who's a California resident and somebody wants to pay you, it's going to cost you more if I live in California because I'm not making the same money as my teammate who's a Florida resident. And so, this is where conversations start to need to be had.
We had that situation with a baseball player, the very large free agent, the largest free agent, I think, this past year, and the Dodgers signed him. But the contract was not based off of just dollars. It was after tax dollars, right? Because it's not just about, well, this is how much I'm going to make. If the Braves are going to pay me this and the Dodgers are going to pay me this, that's not necessarily meaning that it, because the Dodgers are paying you more, that you are going to make more if you have 13% tax versus 6% tax. So it has to be the net effect of what is the after-tax amount, you know? And so those are things that oftentimes don't really get looked at on the surface. You really have to, I mean, the whole point of this conversation, I think, you know, and really, if you look at the core of this conversation, it's planning really matters, you know? And I think for most people, they think of tax as something that you do in late January, early February. You get with your accountant, you give them all your information, and then they kind of say, hey, here's where you are. The reality is, people with significant wealth, people who are doing things the absolute right way, really are looking at things throughout the year. If you think about it, it's like that scenario that I talked about. If you think about a grocery store and someone's going grocery shopping and you don't tell them what you're going to make for dinner, and they bring the groceries home and you're stuck cooking with whatever they've got in the bag. And so you end up with dry spaghetti and Fruit Loops, right? And you've got to make dinner out of that, versus somebody being in the grocery store with you and walking around with you and telling you, oh, well, I'm going to be making, you know, lasagna. So you need to get ground beef, and you need to get vegetables, and you need to get pasta, and you need to get pasta sauce. That's what it is to have accounting done while you're going along the process, as opposed to waiting till at the end of the year and saying, here you go, here's all my information. You know, having somebody in the grocery store with you instead of bringing home Fruit Loops and dried spaghetti and saying, make dinner out of it.
So I kind of want to move a little bit away, but you touched on something that was interesting, Craig. So what are some of the consistent concerns that you see for student athletes related to NIL?
Okay, great. So number one, it's, do I have to pay taxes? Okay. Number two is, what is a deduction? You know, I've heard about deductions. What is a deduction? Number three would be, is there a way for me not to have to pay taxes at all? Those are the three main things that,
I think that's
that-
everyone's.
And by the way, that's not just athletes, right?
I think that's
That's like half my clients.
yeah. But you know, the interesting piece is, you know, is there a threshold where if I make less than this, do I not have to pay any taxes at all? And, you know, obviously, you know, there's the minimum income and minimum income tax, and whether or not you're able to have deductions. So maybe you guys can talk about, you know, what deductions are and how people are able to utilize them, because I think a lot of times you're seeing student athletes who have no idea that they could be writing off their cell phone, that they could be writing off money that they're maybe helping support a family member, you know. But there's things that they can't write off. I mean, this is the battle we always have. You can't write off your trainer. You can't write off a chef. You can't write off, you know, wardrobe. Well, hey, I got to look fresh, you know, like when I walk into the stadium. Sorry, you know, those are not things that you get to deduct.
So again, let me preface by saying not one size fits all. Deductions are expenses that directly result in the production of income. And with college athletes, ironically, it's actually a little bit easier because they're not making other income. With professional athletes, they have wage income from the teams, and then they have their endorsement income. So with college athletes, there's multiple things that they have expenses for. Travel. Some college athletes have to go make a photo shoot. And so, hey, I have to make an appearance somewhere. Expenses directly related to the travel. Obviously, those are deductible. Professional fees. If you're engaging a CPA, a financial advisor, even an attorney, maybe an agent, those are directly tax deductible. If you're doing a photo shoot, and as Craig mentioned, there are some clients we have who may be athletes, but they're also social media influencers. Anything related to the videos that you're deriving profit from are deductions. If you have a laptop that you are producing a video and making adjustments, tax deductible.
Your Beats headphones
Sometimes.
for editing.
So even merchandise, one of the things, as I mentioned before, merchandise can be income. It can also be a deduction. So if Nike comes to somebody and says, hey, listen, I need you to wear this shirt and I need you to go take a video of yourself saying how cool it is on social media. Well, that's not your choice to put it on. So now you pick it up as income. How much of it you're deducting? I mean, that depends on what you're doing with it. I've had clients who are getting merchandise galore from one of their sponsors. And when they're done with it, they take it and they give it to the people in their dorm and they say, here, you guys can have it. So they're not holding on to it. There's no real value that they're deriving from that. And so, like Craig said, it's conversations that we have as to what you're doing with it. A car, are you driving around outside of campus? Are you going to make appearances? One thing that is very popular, we hear it all the time from financial advisors, how about an IRA? Makes sense. Maybe a Roth IRA makes sense. It does, it depends on the amount of money. Sometimes it may not make sense. There may be no tax benefit, and now all of a sudden this is money in your pocket that you want to hold till after graduation. Everybody's different, but as Craig said, it's easier to do it in advance, and we need to know what you're doing to derive that profit, and then you can figure out what's tax deductible.
And I think the overriding concept on expenses, they have to be ordinary and necessary. And so in this situation, it has to be ordinary and necessary for an NIL business. And I'll give you an example of ordinary and necessary. So I had a client who I was during an audit. He was an entertainer, and they were questioning his chartered airfare. Everywhere he went with private aircraft. And they weren't questioning whether or not they were legitimate appearances, because he's going all over the place. The question was, is it ordinary and necessary for him to be flying private aircraft to these places? That was the discussion. And so when you're dealing with expenses and you're in the trenches of an audit, you got to be able to support it. And in this case, you're saying, well, because of the way the frequency of his appearances, also airlines don't necessarily like, it turns into a circus when he shows up. There's a lot of security issues. They get to a comfort level. They say, okay, yes, it makes sense. And so I think in any kind of expense, you just got to kind of look, is this a reasonable thing that I can argue to an auditor that, hey, look, this is. And Craig, you brought up a good point about family members. A lot of these kids, they may have a parent who is actively involved in managing this NIL activity, and it could be very much an ordinary necessary business expense to pay that family member. And so you just kind of understand the client's life, understand all the pieces, and see what makes sense.
So 2 points I want to bring up. One is on that, when you talk about family and their activity in NIL, you see a lot of times where you'll see some high profile student athletes and mom and dad are at every game, right? There's a considerable expense that is involved in them flying around the country to these places. Well, when you look at that, money's coming from somewhere, and it may be coming from the income that's being derived from NIL. It would make sense to have mom and dad be assigned a role as they're my manager, or they're,
Chief brand officer.
Chief brand officer. And so now those expenses that are being incurred to fly them from one place to another to go to all your games are now business expenses that become deductible, as opposed to those being after-tax dollars that you're essentially using to pay for mom and dad to go places. So that's one thing. The other thing that as we were talking about this, going back to the original question about what is it that student athletes who are dealing with NIL often ask, another big question relates to agents, okay? There may be people in the audience here who have designs on one day, being in that field. There's two sides to being an agent, and I think oftentimes people assume that they're linked together. You have a contract agent, you have a marketing agent, okay? Typically, the larger agencies have two individuals that are doing, one's doing one and one's doing the other, but it feels very seamless. But more and more you're seeing professional athletes will have someone be their contract agent and someone be their marketing agent. with NIL, it's still against NCAA rules for you to sign with a contract agent because you're an amateur and that would make you a professional, but you are allowed to sign with a marketing agent. Because they have been so intertwined together, it really doesn't feel like there's any difference, and that's not a big deal, but it's a subtle but very important nuance that's there. And so now you deal with marketing agents as it relates to NIL. Typically, the highest expense that anybody will pay to any person out there in their whole ecosystem is the commission to their marketing agent. Marketing agents typically earn 20% of every dollar that they bring in, okay? Versus in the NFL, the maximum you can earn for negotiating a contract is 3%. In the NBA, it's 4%. In Major League Baseball, it's 5%, but it's 20% across the board for marketing, okay? So oftentimes the marketing can be more lucrative than the contract. And so you will see, and what you're going to see more is people fighting to be the agent on the NIL side more than they're fighting to be the contract agent. Okay. And so there's issues that come along with the idea of what's in that marketing contract, right? Marketing contracts are not collectively bargained. So you hear about the CBA, collective bargaining agreement that every league has, which is a collectively bargained framework of what the contract is going to look like. So every contract looks the same with the exception of a few numbers that are put in for the individual's compensation, but all the language other than that is the same. In marketing agreements, every agent has their own marketing agreement that says whatever it wants. And I will tell you this, typically the person who's writing the agreement is going to make that agreement favorable to them, right? So the idea of needing your own representation to look at the agreement before you're signing with someone is a big importance. And then understanding what you're actually signing up for, because a lot of those agreements will have what's called a fee tail, which means that if I do this deal with Nike for you, and it's for $1 million, so I get paid $200,000 off of this deal, as long as you are with Nike, even if you fire me, I get paid on the first $1 million. And that's what's called a fee tail. Those are things that are 100% negotiable. These are all the kinds of little subtle things that most student athletes don't know and don't understand because they look at the agent as being the most important person who's going to help them in their career. And while I will say they do deal with an important aspect, which is negotiating your contract, the reality is the performance of that student athlete or that athlete on the field or on the court is going to do 99.9% of the negotiating of what they're going to earn. The agent really is there to make sure that that 0.1% doesn't get messed up. And so it's not as big, in my opinion, as big of a thing where like they are the end all be all. They're a very important part of the system, but they are not the only part of the system. And so I always say you've got to have many people around you and as many sets of eyes as possible around what's going on to make sure that you're getting the best for you.
Yeah, and kind of on what Craig was saying, sorry, well, just one thing on what Craig was saying. A lot of this is new for any of these college athletes. This is all coming at them very fast.
Mm-hmm.
If somebody comes to you and says, "Hey, listen, I'm going to pay $200,000 to market my company," and it's like, wow, it's $200,000, and you have an agent. One of the things, and this goes back to one of the things Willie said about what I think when people say raises red flags. The first person who comes to you as an agent, as a financial advisor, as an accountant, as an attorney, don't automatically assume that they are the person you're going to use. It's just like buying a car or buying anything else. You need to shop around because the first time you hear different information, your antenna should go up and say, wait a minute, why is he telling me something different than him? And a student athlete needs to understand they have all the leverage in the world. And that when it comes to somebody who's coming to you to try and sell you on something, you need to understand that you have to understand what you're signing, like Craig said about the fee tail.
Yeah.
And you have to make sure that you're getting the best quote unquote price. And so if it's an advisor who's saying, hey, you should do this, feel free to go to the guy down the street and say, this is what so-and-so told me. What do you think? And then go into a third person.
And I think just on those lines, what happens with a lot of these with a lot of athletes in general is they're their major financial advisor is somebody who's selling them something like an insurance agent or something like that. So you have to be really careful about who the advisor is. A firm like ours, we're independent. We don't make money off of selling products to people. And I think one of the key things that any student athlete one of the key things they need to do is find an advisor. Find someone that is competent, that knows these issues, because they're who isn't trying to make money by trying to sell them something. That's extremely important.
So I think we briefly touched upon the whole thing dealing with, like, instead of receiving money in form of cash or revenue, there's other ways you get paid. So because of that, if I was to talk to a young student athlete who had an opportunity to take ownership within a company rather than getting paid, what would your recommendation be for that actual student athletes? I think you were touching briefly on in terms of the contract between marketing and
Right. So I'm going to let these guys deal with the tax aspect of things. But one thing I will say, especially on the marketing piece, and then don't forget the question that Willie just asked, but what's happening right now in NIL is you're getting agents who are saying that they'll give you give players marketing advances. Okay. And all a marketing advance is a pre-funding of money that you were going to earn, and you have to earn it back. If they give you $100,000 marketing advance, you don't make another dollar until you've recouped that $100,000, right? So they're just giving your money up front. That is very different than a marketing guarantee, okay? A marketing guarantee is when an agency tells you that they're going to guarantee you a certain amount of income in that year during the, from now until December 31st. And if they can't get you that much in marketing, they have to write the check to pay you the difference. That is much more valuable than an advance, okay? Because an advance is simply just telling you that, because it may take you 7 years to earn 100,000 in marketing, and you earn it over that 7-year period of time, and you've made no more money. If they give $100,000 guarantee, that means if you've only earned $5,000 over the year, the agency is writing you a check for $95,000 to make you whole, okay? So there's a significant difference between the two. I'll let you guys talk about the idea of equity and
Equity can be a very lucrative thing. If you get a piece of a company, the one thing they have to be careful of is they have to understand what is the tax effect to them. They are going to be taxed at the fair market value of that interest, and so up front they have to understand, well, how much is this going to cost me? And I think it's very important to have any kind of equity deal structured properly and reviewed by counsel, because it could go sideways quickly. Again, they're having to pay tax on something that isn't liquid, and so in some of these situations that it's one thing to receive a car that's worth $100,000. It's an asset. If somehow you don't feel comfortable keeping it, you could sell it. It's not so with a non-marketable security.
Yeah, and just so you guys understand what we're saying about receiving equity, let's just use an example that somebody, Syracuse alumni, comes to you and says, "Hey, this is great. I got this startup here that's going to be fantastic. It's a product that's going to explode, and we're going to be able."
Company. It's the next Vitamin Water.
Yes,
Yeah.
Actually, it's a great example because I was going to the next Vitamin Water, and I'd like you to be the face of it. And what I'll do is I'll give you a 5% ownership stake in the company, and you'll grow with us. What Mark was saying is you have to understand you pay tax on that value. Now, most startups, when they give you the equity, don't have any value. It's zero. You make an IRS election, and you pay no tax, and then you just hope that kind of skyrockets. For anybody who knows who David Wright from the Mets is, David Wright, when Vitamin Water started, was paid almost nothing. And he took a ton of equity in Vitamin Water because they were in College Point, right by Shea Stadium at the time. He was paid out more when Vitamin Water was bought by, I think, Pepsi or Coca-Cola. He was paid more on that contract than he made through his years with the Mets. And so equity is great for a younger, not just college athlete, but professional athlete, because there are some building businesses who can't pay you cash. but have a surefire, company, and they say, we'll give you equity in it. There are concerns, anti-dilution clauses, voting rights,
Phantom income.
phantom income. There's conversation, like Craig said, you always have contracts reviewed, but equity is a way for a younger professional athlete. There may even be students, in here. Look at Facebook when it started. Imagine those guys on Facebook said, "Hey, I got a great idea. You could be the face of, our product, and we'll give you, 10% ownership."
The problem is when you have companies that may be out trying to raise money, and they say that the company is valued at $10 million and they're raising money at a $10 million valuation, let's say, and they've given you 5% ownership in the form of equity. So now you're sitting there with a company that is illiquid because it's a privately held company that doesn't have many suitors, let's say, and you've received $500,000 of quote unquote income because the equity is counted as income. And now you've got to pay 30% in taxes on that $500,000 when you haven't received $500,000. And that's the term called phantom income, which means that you're paying tax on income that you haven't received. One of the things that we discuss with clients a lot of the times is don't take equity, take options or warrants that allow you to purchase this equity for very, very low strike price in the event that it actually turns out to be something. That protects you from having to deal with the income today and having to pay tax on it today, but also doesn't stop you from being able to have the potential upside of it tomorrow.
So fortunately, we have the luxury of not just having great student athletes, but we have a lot of great students from both Whitman, Falk, and SU in general. And some of my prior students asked questions in terms of how do we get into this space? Because it seems like it's kind of one of those specialty niches and et cetera. So I was hoping if you could kind of chime in. I took a little reverse setting. And the only reason why is because, all student athletes don't necessarily, they may or may not go pro. And if that's the case, but they want to still be married to the aspects of being within an athletic setting. So what advice would you basically give all those different type of students? So Mark, I'll start with you.
Yeah, I think it's critical for student athletes to be thinking of what they're going to do after their sport, because the average length of a professional athlete is fairly short, and so it is critical. I would say, find. We were talking about this earlier. Find a mentor within the school. Find another. Be associated with someone else in the business school, in the Falk school, that can kind of help shepherd you along in an area that you're really interested in. I know, look, tax, business management, our area, it's an extremely high growth field right now. We have a hard time finding qualified people to work. So it's, the demand is there. It's just a question of kids getting into first the message coming out, this is what we do, and then having the opportunity for them to get some experience in it.
I will say this, ASAP Rocky, first dinner we had, he says, he's like, man, I didn't even know there was something even called an accountant. And it stuck with me. This was probably 12 years ago, that it's hard to dream about something or aspire to be something if you don't know it exists. Okay. And so part of the great thing about being able to sit up here and talk to, and this is not just for student athletes, this is for all students, about what it is we do, is to give you all exposure to see that there is something out there that is a little bit different than what people typically assume is what happens in accounting. I mean, look, I went to Tulane and I was in the business school, and I thought accounting was the most boring thing that I'd ever experienced, and had no designs initially on sitting in the place that I am now. What I did know was when I was done playing baseball that I wanted to stay kind of closely tethered to sports. And this gave me the opportunity to do that. I think most people kind of think if they want to be involved in sports, it's either you're going to work for a team, you're going to work for the league, or you're going to be an agent, and those are the only three opportunities. That's very much not it. There are investment advisors that, financial advisors that work exclusively in the sports space. There are accounting firms and people who have practices like myself that are exclusively in the sports space. There are, like, you've got stylists that are out there that work exclusively with professional athletes. You've got chefs who specialize in tailoring meals specifically for the athletes' bodies. You have personal trainers out there who work exclusively with professional athletes. The point is to say that, with you all being very business minded, there's an entrepreneurial side of things that can be done to work in the athlete world. But the accounting space doesn't have to be boring. I would say that in terms of the interaction with the athletes, when you're dealing with someone's money, you interact with them more than anybody else, more than their agent, hell, more than their parents, because you're the person that when they need to pay for the nanny, you're the one who's cutting that check. When they need to file their taxes, you're the one that's filing the taxes. When they need to make sure that they've got money set aside for their kids' college education, you're the one that's setting up the 529 account. So this is not just a sit in a cubicle or sit in an office and bang out tax returns all day. It's much more interactive, and it's really gratifying, but it can also be a little bit depressing, because statistically, professional athletes have not been great stewards of their money. We sit here with a common mission to really change that, to flip the percentages. Right now, it's 78% of professional athletes go broke or are in financial distress within 5 years of receiving their last paycheck. We're trying to have that be the opposite, where 80% of our clients are the opposite of that. There's always going to be the situation where individuals look and say, well, hey, I've got this money, I'm just going to spend. But if they've got a real plan that's in front of them that does real forecasting, you really do have the ability to affect change.
Yeah, I think, as I said, my background was not in sports, taxation for sports. I'm a huge sports fan. And so when presented with the opportunity, like, probably most college kids, I was like, this is going to be amazing. This is great. And I remember one of the first things Craig said to me was, they're just like us. They're just like your other clients. And they are. There's two things about it that I find. It's a very challenging profession. No other tax job do I think you get as scrutinized as you do when you do high net worth individuals who are celebrities, actors, actresses, and athletes. They're constantly, as I mentioned before, you always want to go and check, checks and balances. And, they may have somebody else in there speaking to them. And so, we do things and you have to have the integrity to stand by what you're saying. And so, like Craig said, when we said, you can't buy that, or, hey, you can't take a tax deduction for that. And they said, well, my friends are in the locker room. How many times do we stand up and say, we're not doing it?
Right.
And most of the time they come back and they say, all right, fine. So it's hard. It is a hard job. I mean, there's nights I go home and I'm like, man, that's a hard conversation, or this is tough. But then there's the times where you have a call and you're on a meeting and all of a sudden, that tax call turns into, what do you think about the current state of the NBA? And it's like, wow, that's pretty cool. Okay. It is fun. So there's rewarding aspects to it. I would tell anybody who's looking to do it, and I'm only going to comment from the tax side, it's a very challenging profession, but it's insanely rewarding. You're always being, challenged to learn something new, whether it's, I can tell you state tax rules from most of the states. Massachusetts just passed a millionaire's tax. I got to know that kind of like at the drop of a hat, because I'm going to get a phone call tomorrow. Why weren't you on that? Why didn't you know that? And we really kind of have to stay, on our game. It really, like Craig said, we're not just sitting in our cubes or our desks, just, pushing, buttons. It's something that is rewarding.
I think ultimately it's very multidisciplinary. You have to advise the ultra high net worth individual that is an entertainer, a sports figure, just generational wealth. You have to understand income tax, federal income tax, state income tax, various kinds of estate planning, asset protection. You have to know about insurance and you bring what is very rewarding about it is you're bringing together a lot of disciplines to advise a client. And what happens is you really become their trusted advisor. I mean, pretty much for a lot of my clients, I'm the first person they talk to, sometimes before their spouse. So it's a very rewarding, challenging, but very rewarding field.
So this is my last question before I open it up to the panel. So 2022 tax return are due April 15th. I'm an accounting professor, so I feel like I should segue into this last question. What should the student athlete do at this point for 2002 taxes, assuming that they were not set up as a corporation in 2022?
Well, I mean, a lot of it depends on thresholds of income. As I said before, I mean, for most of our clients, most of the NIL individuals who come to me, I would generally recommend, hey, set up a single member LLC for that. The corporations, there's a little bit of a higher threshold. You're never going to go backwards. I mean, going backwards, I think, is counterproductive depending on, how much it is. But we're still in January, and a lot of these tax documents don't come out for another, 3 weeks or so. What I would tell anybody, as I mentioned before, speak to family, friends. If you know a CPA, speak to them and just say, here's what I'm looking at. Generally, they should have an idea from a tax standpoint, what's income, what do you have? There may be further questions. I would ask questions of them and say, I got $50,000 in cash and, oh yeah, and I got a diamond ring. How do I have to pay tax on that? Should I have been paying estimates? A question that came up last year, and it's a good one. One of the parents asked me was, is my son really a dependent of mine? And we had to take a step back and say, let's look at that. And, the definition of a dependent is a parent, is a child of a parent where they receive 1/2 of their support. Well, if a child's making, $30,000, $40,000, $50,000,
And the parent makes $30,000, $40,000, $50,000.
we had to take a step back. And next thing you know, client qualified for some of these COVID tax credits that carried over to 2021. They qualified for education credits for some of the payments that they were out of pocket, and they wound up getting a $6,000 tax refund, even though they had no tax withheld. So it wound up really working in their favor. Conversations with a CPA are not necessarily always super boring. You just, you let them know this is what my earnings were. And it should then dovetail into, okay, what were your expenses, as we outlined earlier?
And we'll touch on that, because if they didn't have an LLC, does that mean that they can't have expenses?
No. If you're not an LLC, there's a form, it's Schedule C, sole proprietorships. You can take the same deductions as anybody else. The benefits of the LLC and the S corporation outside of, any sort of tax savings is really for anonymity purposes and liability purposes. Sometimes people don't want to know what they make, and so they set up an LLC where they get paid into, so nobody could find out, hey, Nike has a contract with, Danny Moore. It's, my LLC's name.
Yeah, I think it is. I think for the student athlete who has sort of ignored it, and I would say the most critical thing is to find a tax advisor as quickly as possible. And the more you wait, the closer you get to April 15th, the less likely you're going to find someone competent that's going to be able to help you. So I think first and foremost, I would say find somebody that can advise you. And then I'd say go back and figure out and try to recreate. What did you get? Make lists of income. Where did you earn it? Was it earned in, what kind of income was it? Was it endorsement? Did you do something in a different state? What state was it on? So I'd say first get your arms around all of the income that you had for the year. Hold on to third-party documents that you receive, 1099s and so forth. And again, most importantly, find somebody that can help you.
My last point I guess I'll make on that is, there's the adage, cash is king. not when it comes to taxes. Okay. Like it is the devil because cash is untraceable, right? So when you're looking at what are your expenses, we oftentimes will say to a client, you're using too much cash. We have no idea what you're spending this money on. So we have no idea whether or not these are legitimate deductible business expenses that we would be able to write off and take as a deduction for you. So, for any student athlete who's receiving income and NIL, there may be things that they could ultimately have as expenses that they would be able to write off against that income and lower their taxable obligation, but they're using cash, and spending all their money in cash. Now cash is turned into Venmo, a Cash App, but it's the same thing, like unless you're able to get a real definitive record of those expenses, you're not able to write them off, so just having, a Venmo receipt that says that I sent $500 to Danny isn't going to do it, so you want to have great records. And like Danny said, you can't necessarily go backwards, but we're only in January. So looking forward for 2023 and beyond, you want to have great records. You don't want to use cash, and you want to make sure that you're talking to somebody you can in advance to help you plan it out.
And the thing with cash goes the other way too. Even though you may not be able to deduct an expense because you paid it in cash, if you received it in cash, you better believe it's income. And like Craig mentioned, Venmo. A lot of people receive payment for Venmo. And so it could be, hey, I'm doing, 20 of us are doing a quick appearance somewhere and we got $800 each. We got sent, to us via Venmo. And that may be, in one ear and out the other. And come January 31st, when you get a 1099 from, John's Pizza Shop down the block for $800, you're like, I don't remember getting $800. You got it in your Venmo.
Yeah.
And the IRS is forcing Venmo, PayPal, and some of these other companies to make sure they track money over $600 and issue 1099s for it. So just be aware of that.
And also one of the standard things that an auditor does, IRS auditors, when they audit you, is they do a cash receipts test. So they'll take your bank records and they'll look at everything that's deposited in your account. And unless you can show that it's a gift or it's something other than income, they'll count it as income. So cash deposited, absolutely.
Not trying to scare you.
Yeah.
But I wanted to take the time to kind of not only thank our panel, but I also wanted to basically see if there was any questions from the audience and stuff like that, because we have a lot of individuals here that work in this space, work in the student athletic department, and then we even have students that are interested in getting in this field of work as well. So open it up to.
How are you? Thank you very much. My name is Dave Maloney. I teach an NIL course on campus. I'm over at Falk College. Collectives is sort of the wild world. What can you sort of give as guidance for donors, right? Because donors may give $10,000, $20,000, $30,000 towards a collective. So we have 2 collectives here at Syracuse. Other rival schools have upwards to 4. So let's just say a fan gives $20,000 towards a collective. That is a tax write-off, I guess, possibly for them. And then that student athlete goes and does a charitable sort of appearance or something at the soup kitchen. The athlete makes $5,000. Am I making sense? Can you talk a little bit about how this is going to evolve for donors as well? Because they're going to end up getting nervous and maybe not giving so much money towards a collective because of the tax implications down the road.
Go ahead, Mark.
I know the IRS is looking at this issue very closely right now. So right now they still are charitable organizations. I would say documentation is key. Arm's length transactions are everything has got to be very clean. You treat it almost like what I'd say a private family foundation. The IRS is very attuned to every single transaction that happens within a foundation. You can't do any kind of related person can't. He has to be very careful in their relations to it. And I would say apply the same kind of standard to these collectives. Whatever you're saying you're doing, you absolutely have to do. You got to be able to substantiate charitable actions. Otherwise, you run the risk of losing the charitable tax exempt status, and they will be looking at it. I guarantee you.
I was going to I was going to chime in and say, I think one of the concerns, and maybe even to your point, is the numbers are getting at some of the schools, in terms of the amount that student athletes are receiving from these collectives are getting so large that they become outsized relative to the service or the work that they're doing.
Mhm.
And that's going to create a real issue, because if you're a nonprofit, right, and you're paying someone $100,000 for an appearance at a soup kitchen, under scrutiny, does that hold up,
Mhm.
right? Like, and does that put that 501c3 designation in jeopardy? I think it does. The idea of the tax deduction may go away, and that, I think you'll start seeing these collectives really just be organized booster organizations that are built strictly for the idea of being able to fund NIL for student athletes. And then you don't have that impact because it's dollar in, dollar out. The taxes are being paid by the student athlete, hopefully, but there's no tax advantage to the collective, so to speak. I think that's going to be more the way it goes. But a bigger concern from an athletic department standpoint, in my opinion, is now you've got this bifurcation of, hey, I want to support my school because I love the school, but I've also got to support, but in order to support the school because I love the school, I've got to give money to this other organization over here so it can have a pot of money to be able to pay these student athletes, right? Which is going to take money away from money that may have been donated to the school to do upgrades on facilities and things like that, right? And so it really is going to be this splitting of the funds, this donor pool that's available is what ultimately is going to happen, whether or not it stays as a collective or if it ends up being a booster organization that's, having money available for student athletes.
Yeah, I think one of the things, not to go back on what you guys said, as a whole, with regards to NIL in general and with regards to the collectives, this is all new. And whenever there's something new, it's when it gets challenged is when you're going to find out the answers on it. And as I think Mark pointed out, I'm sorry if it was Greg or Mark pointed out before, there's a real issue in the IRS right now. They're still processing 2020 returns, and they're still processing a whole lot of other things, fraudulent PPP loans and fraudulent, returns filed for tax credits. And so one of the problems is I don't know that there's going to be some clear guidance on some of these NIL issues for a couple of years. And then it becomes, who do they go after? And do they go after these huge programs that now have, as Greg said, these multi-million-dollar collectives? And so it's so layered that it becomes a little tough, and everybody has to make their own interpretation and say, all right, let's stick with it and hope to God, under audit that we're going to go with it. I mean, I hate to sound that way, but that's what it is. When you don't have clear guidance, and whether it's at a state level or federal level, it's you have to interpret, or some, whomever it is has to interpret the law and say, let's go with it.
And I wouldn't be surprised to see legislation, honestly. We've had a number of politicians thinking and proposing. So I think the money is so large, I think you are going to see legislation in this area.
So what would be your advice to a student athlete? I had a conversation, remain nameless, the school in the ACC, but 1.3 million quarterback, 850,000 defensive end, and 650
Wow.
for a wide receiver. So I heard that yesterday. I got a phone call on it.
Out of the collectives.
Yes. So out of the collective. So now the point you had made, what would be the advice if that student athlete is going to the Boys and Girls Club, Make-A-Wish, whatever it is, and getting, let's just say, even $200,000 out of that? Are there tax implications? What would be the advice to be cautious on some of that? I'm doing charitable work.
Well, I don't think that they're getting, because they're going to, that's income to them. That's
yeah.
reportable income that they're going to have to pay the
Correct.
tax on it.
Right.
I think it's the collective
Yeah.
that would be.
Correct.
Right. So the collective. So for the athlete, you would just say, hey, you're going to have
Yeah,
to report that.
Absolutely.
Don't
Yeah.
worry about what the work you're doing. The collective is the one from the tax implications, correct?
Yeah.
The
Yeah,
charitable piece.
any kind of charitable organization, you have non-distribution. In other words, a charitable 501c3 can't, you can't enrich.
Okay.
It's so then the question is going to be, is it really a charity when you're doing this level? And my gut says no. Okay. And I think legislation will catch it. I would be very careful about having that kind of a setup.
Because what you're talking about, I guess if you think about it like this, in the typical format of a charity, hey, it's the American Cancer Society. When somebody is donating to that charity, it's for the benefit of helping cure cancer, right?
Correct.
But if you're then paying somebody millions of dollars to do this thing, it's like that's, to show up at an event,
Yes,
that's not going towards curing cancer, right? I think that's the point you're
that's
getting
my
at,
point. Yes,
right?
correct.
That's on the charity. The issue, and to Mark's point, is these people are actually donating this money to pay players, you
Yes.
know?
It's not disinterested generosity, which is the language used in a lot of court cases.
I just don't know how they're going to be able to say that that it would hold up, and this is these guys' expertise, but to hold up under IRS scrutiny that you get a tax deduction for giving money to pay players,
Correct.
right?
I think I think it would depend on the organization and how it's structured. And I think what they would probably look at, and I don't think it's a whole lot different than, let's say one of these large charities is holding a golf outing and they call LeBron James and say, hey, can you come down and be the speaker that day? And they're going to pay LeBron. And their argument is, okay, well, because LeBron came, we raised an extra $250,000 that now we're giving to the non-for-profit. I think the biggest thing they're going to have, if they're bringing in $5 million and then they're paying the athlete $5 million, there's no charitable purpose there. They're going to have to show that they're paying $5 million, to the athlete or the program, to the athletics there, and they're giving $10 or $15 million to some sort of charity or something. I mean, I'm using that number because they're going to want it above. That's where the scrutiny is going to come in, is, there better be, whatever the ratio is, it better be more money or equal going to the charity than to the athlete.
Yeah, they're going to look at substance over form, I think, eventually. What is really going on here? And so I think it's a big risk area.
But I think the risk is more to the collective itself than
Absolutely.
it is to
Correct.
the
To the athlete, there isn't risk.
Thank you.
Question back there?
in the back.
Appreciate y'all. Andre Sims, Career Development Coordinator for the athletics program here. I've been here for about 6 months. Appreciate y'all's time. It's been awesome. I got 2 pages of notes. I think one of the biggest things that we are trying to do in athletics is inform student athletes about the opportunities that are out there. So I think this is a 2-part question. 1, what are the trending NIL opportunities for student athletes currently? And what does that look like for a startup for them? And what can we teach them? So it's actually a 3-part question.
So I didn't hear the second, Andre, I didn't hear the second question you had. But
So the second
number one was what are the, where is the trending?
What are the
places where
trending
they're
NIL
earning?
ideals?
Okay.
Yes, for student athletes currently. How can we, without you all being present, present that information to them so it's easily understandable? And then how do we allow them to now take the next steps into getting into NIL?
Great questions. And I appreciate you showing up and taking those notes too. The number one place where student athletes are earning from NIL standpoint is through these collectives, because there has not been a unified system that's been set up to help student athletes. You do have an app called Open Source, okay? And Open Source is where student athletes go and they upload themselves onto essentially this platform, and they will source deals or attempt to source deals. Open Source hasn't married athletes with opportunities well, because where they've been really diligent in getting athletes on the platform, they haven't worked as hard at getting these businesses on the platform. So the answer to your second question, where is there an opportunity or where are there opportunities? It's local, okay? If you think about it, the athlete at Syracuse University unless the program is for some reason getting a ton of national attention, is going to get most of their advertising opportunities or marketing opportunities from people who are hyper focused on what's going on at Syracuse University and the surrounding areas, right? Where that name, image, and likeness carries weight, right? And so local businesses will have a stronger affinity to a student athlete at Syracuse than I live in Florida, right? Than, having a commercial that's running down there, right? There's not that connection. And so there's a real opportunity for those young entrepreneurs. And we were talking about this earlier today, some of those young entrepreneurs that are in the business school or in Falk to go out and try and make relationships with some of these local businesses and say, hey, if you had XYZ lacrosse player or soccer player, congratulations to the soccer team on winning a national championship. Show up if you're and hey, we're going to give you $500 and I want you, in an apron serving for an hour or at the register for an hour or something like that. Those are the kinds of things that if done properly, because you can get whoever the beat writer is for the athletic department here, they've got to put stories out every day, right? And have something to do. And so if there's something interesting that's going on and you're able to kind of put a different and unique spin on that, like, you've got an offensive lineman who's at a donut shop serving donuts, right? And they got paid $500. I'm not making stereotypes here, but I am. Those are the types of things that you could potentially have where that donut shop is benefiting because it may be on the news or it may be in the newspaper. So they're getting eyeballs on that. That student athlete is benefiting because, hey, their profile, their body type lends itself to be kind of, tongue in cheek with what they're selling. And it's those types of things. But you're not going to have William Morris or CAA or Wasserman or Excel, the large marketing agencies coming in and doing that because it's not a big enough bang for their buck. Them making 1,000 or making 20% of that $1,000 isn't going to do it for them. So there's real opportunity for the student athletes and there's real opportunity for the entrepreneurial spirits that are in, Whitman and Falk to be able to go out and develop those relationships to be able to help those individuals. And it does in that situation, it doesn't have to be basketball and football. It can be some of the non-revenue sports as well that are having the opportunities to do things, So the local establishments, the local people who are supporters of the athletic programs are the ones that would be the first place I would look at to see whether or not they'd be interested in supporting the student athletes.
Yes.
Hey, my name is Jack Rams. I'm a grad student here. Unfortunately, not one of those athletes on that collective deal that was just mentioned, but just interested to see, hear what you guys had to say tonight. So I appreciate y'all coming out. I'm most interested to hear about particularly like conversations and your guys' experiences in the past 3 or 4 months in particular surrounding crypto, especially individuals whose either sponsorship money is tied to a particular token or whose, some people's contracts are actually tied to one of those currencies that obviously is not fixed.
Yeah, so I'll kind of chime in quickly. So there was a big story. I don't know if you guys saw it with Odell Beckham Jr. When he signed with the Rams last year. Odell signed and had his entire contract paid in crypto. When that happens, when you sign your contract, the team has to go out and purchase the crypto for you that will then be used for your payroll 15 days later. 15 days later, crypto dropped 40%, let's say. He got paid $1.5 million. The Rams are in California. By the time Odell got paid, and he had to go into his own pocket to pay them, to pay the withholding taxes, I think he walked away with $35,000.
Off of a contract of how much?
$1.5 million. So I've had a professional basketball player client where we've had an estate planning meeting where he, not tied to his endorsement income, but wanted to put $6 million into a trust in crypto. He wanted to put the crypto directly into the trust because he was like, this is going to be great. Problem with that is you're utilizing 1/2 of your lifetime exclusion for something that may be worth nothing down the road. Crypto is something that a lot of professional athletes hear. It's cool and they want to do it. I'm not going to speak about actual valuations and what should it be invested in. It's something that we have typically told our clients, if you're going to go into it, unless it is something for a token that's going to have your face on it and, hey, it's got your name and you're going to utilize it, we don't necessarily promote getting paid in crypto. If they want to buy it after the fact, fine. I mean, there's other tax ramifications for that, but there are some stories out there on individuals who do have their contracts tied to it where they walk away with nothing. Listen, Odell, it was a gamble and he lost. But if he was a first-year player and did that, he'd be in some sorry shape right now. So, you know, a lot of players, a lot of people in general, you know, see something that they think is, hey, that sounds great and let's go with it. There are a lot of companies that wanted to pay, want to pay with it. I think it's changed, like you said, in the last 3 months, it's changed very quickly because I have not heard one client bring that up after about a half a year where every single person wanted to be paid in crypto.
And NFTs.
You'd know that a lot better. So it's the conversation has changed. It's really quieted down. I think it was a big fad that everybody wanted, and it's really kind of taken a bit of a back burner. That story, like I said, if you go Google it, you can see it. It's kind of a crazy situation.
And so crypto, crypto is not considered cash. Crypto from a tax standpoint is property. And so essentially they're receiving property that's very volatile, right? So let's just say, let's look at a crypto transaction. Let's just say somebody buys Bitcoin. It doubles in price, buys it for 25,000, goes up to 50,000, and then they go buy a car with that crypto for 50,000. Well, they have a gain built into that of 25,000. That buying that car with that crypto has just they have to realize a gain. In the situation where the value dropped, they would have a capital loss. But that capital loss would be limited unless they had capital gains. So it's about the worst situation.
Yeah.
Ordinary income and capital loss.
And I'll say this, I actually was on national TV. While it was the hot thing to do, I got interviewed by Maria Bartiromo in February last year, and she asked the question of, what about crypto? And now I look like a genius for what I said, but I got laughed at when I said it. But you have to think about it as, crypto is an asset class, right? And so just like stocks are an asset class, just like bonds are an asset class, crypto is a collective asset class, but they're not buying, having their contract in crypto, they're having their contract in one cryptocurrency, which is essentially saying like, hey, I want to have all of my money in, I want you to pay me in Tesla stock, right? It's this more aggressive than that, but similar concept, right? Because you're looking at one individual currency that you're getting paid in. And so just like anybody, if you look at from an asset allocation standpoint, that diversification is the key to limiting the downside risk. By putting all of your money, taking your entire contract and putting it into a single cryptocurrency is essentially like taking your entire paycheck and putting it into a micro cap stock that you heard was doing well. And typically, if it's already had its run up, that's the last time, that's the exact opposite time of when you actually want to put your money into it. So I don't think it's a smart move. It's not that I'm anti decentralized finance and cryptocurrency as a conceptual platform, but to take money when you have a finite period of time to earn money, and certainly a finite period of time to earn significant money, and to bet with it that a single currency is going to be the place to do it, I don't think that was a wise decision.
Mm-hmm.
So for the brevity of time, I'll give a final thought, starting with Mark, and I'll conclude with
Well, first I want to thank everyone for being here. It's been a lot of fun, and I know we as a firm we're very happy and proud to be here. This is an area where we love. We're very passionate about working with athletes and entertainers and high net worth individuals, and I want to say that the conversation doesn't have to stop here. If anyone has any questions, they're more than welcome to reach out to me by phone, or I'm on LinkedIn also. You can connect up with me. But my final thought is that the athlete has such a short period of time to earn money, and it's so critical from almost a fiduciary standpoint that we were very passionate about engaging and making sure that this athlete is taken care of, and I think that's what drives us professionally. So
Yeah, like Mark said, thank you very much for not only being here, but being attentive, asking great questions. I always say education's a journey, it's not a destination. We all have to continue the process of learning. For this space, what's really unique about it is there is no expert, right? There's a lot of people who are out there saying a lot of different things and speaking with a lot of confidence about what they're saying. But this whole situation, this whole NIL world is so new that there can't be anyone who's an expert in it at this point. So we're all kind of learning this together, and figuring it out together. And I would just tell everyone, my opinion is to be cautious, to tread lightly, to kind of not dive in full steam ahead, because there's not enough historical data to say that what we're doing is going to actually be the right thing. What I know is that if you believe in free markets, they will eventually even out. The $1.6 million to a quarterback and the $800,000 to a defensive lineman may not be enough, but it's probably too much, but it's gonna level out, and what has to happen regardless of that, because you have student athletes now being able to earn, means that they have to be educated about the money that they get. And that doesn't matter if it's $5 or if it's $500,000. If you only got $5, that $5 important to you, So regardless of what the amount of money is, we've got to educate these young men and women about the potential pitfalls, because there is an opportunity for them to be in a better position than they were, right? But there's also an opportunity, because of having penalties and interest, to be in a worse position than they were. And so for everybody that's here, if you've taken anything away, that you find useful and you can spread it on to someone else, then we've done our job. So I appreciate you all being here.
Yeah, so I got just, two comments. One kind of on the NIL side. I think, like I said, the world is ever evolving. As Craig said, he played college baseball and then went on to play minor league baseball. I think if you went up to Craig Brown in 1993 and said, hey, by the way, they're going to be paying athletes soon, he probably was like, yeah, sure. And they're going to raise it this way. So 5 years from now, it might be totally different. And so to the question of, well, how do these guys get paid, or what's the best way, or what are your suggestions? I think it's going to be ever changing. I think there's always going to be a new idea. And with the flow of information through social media, I think you're going to see the way that athletes are paid is going to change. Every year, there's going to be a new idea out there. And I think it's just, keeping yourself plugged in and having, schools like Syracuse University and the other ones who are communicating with the students, and they have events like this. I think that's what's really going to help do that. The second part of that, and this is to the business school, to anybody who wants to get involved in this area from a professional standpoint, there's so many opportunities out there. I just, knowing it from, like I said, I'm in New York, I head up our New York office. And for anybody who wants to, go out there and get involved in this kind of work, listen, there's opportunity. And I would suggest doing it. It is interesting, it is different, and it is really challenging. And to be able to do it and work with people, the three of us work together pretty regularly. It's pretty rewarding. And with everything that's gone on the last couple of years, to be able to do that is pretty cool. And I would highly recommend to anybody who, if you have any questions, if you want to discuss it, after this and say, hey, can I run some things by you? By all means, feel free to reach out.
Well, thank you guys for coming out. Thank you to our panel. Thank you.